Hello, welcome to another live stream and another episode of Daily Market Mastery with me, Christian Rauchenwald, on this, what do we have, Thursday. I hope you all had a great week so far. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description below. And the one thing I always recommend is, if you haven't done so, you can read the Elliott Wave principle online for free when you use the link in the description down below. With that said, we can jump right into it. And as we can see, we have a slightly, or a usual roughly break even starting to the day with a less than $100 change to the portfolio in the pre-market. Hi Olga, great to have you here. I hope you had a great week. One thing that happened is, while we have our Intel put options and our SPY beer put spreads or beer spreads, the motive wave is not open yet. And while they looked promising yesterday, and probably so, and yesterday we also had the orders in place to potentially close them if they move in certain directions. However, I miscalculated. And so those trades appear to have gone against us. As we can see here, SPY is now in an area where, we already made a new high, so it definitely will not play out like this. Apparently, this was the entire correction. Visually, on the hourly chart, I would say 1, 2, 3, 4, 5, and then ABC, and which means we would still be missing waves down. It, however, has to be, hindsight is 2020. It, however, has to be that indeed this divides like this. Which also fits. I just considered it visually not a suitable option, which makes the difference between taking some profit yesterday and actually looking at what's that, like $45, $50 loss on the trade. Not a huge amount of money, but still obviously a little bit disappointing, especially considering that we were right initially. Overall, that means we're currently looking at another 5 waves up here, which means, by the way, from the looks of it, we have so in SPY, we have wave 1, 2, and a finished wave 3 that did not fully retrace the 38.2% that we usually would expect, but almost. And we can get our wave 5 profit targets by using an expansion here. So we would expect this current move to take us at least to the 590 mark. Might be, I don't know, gonna consult 1 second option strat if it makes sense to 590.76 for today. Is there 588? Oh yeah, but the question is, will we reach it today? Of course. So today is the 17th, and actually for tomorrow, okay, because there would be a great trade for today if we take that gamble. We might actually take that gamble. Because according to option strat, which is also linked down below, if we buy the 588 call, it should be, the premiums are not updated right now, so that might change once the market opens in less than a minute. But you can see that the risk reward ratio of that would be insane if we manage to get there today. However, question is, will we? And if we do the same thing for tomorrow, so if we say the same thing for tomorrow, we can see the payout is still good. So it's $30 risk. We probably will get 2 588 calls here for around $60 total. So market's already open. So SPY, come on, hurry up here. Time is money. For tomorrow, 588. Now the price is already going up for that. So now the quotes are updated. So for this price, it's probably not worth it anymore. Because that changes the equation a lot. There's still like a more than 100% risk reward ratio, or not risk reward ratio, but payout, but it's just not that much worth it. I might have to reinstate my options that subscription to not have delayed data there, because time is money, and tricky. So I think again, based on how this developed, unfortunately that correction I mislabeled, again, visually more likely for me 1, 2, 3, 4, 5, but apparently it's A, B, C already finished, which means that is the next wave 1, 2, 3, 4, I would assume, and 5 now in progress. we might be able to also get a little bit of extra confirmation here. So first of all, our big wave 3 bounces at the 238.2 extension level. And now here on the smaller scale, we bounce at the 338.2, this big candle here. And then for the profit target that we get in here, we could use this. Yeah, and we can see that we should at least reach the, I mean, it's like a huge candle here, but we should at least reach the 587. And again, like the profit target based on the bigger wave pattern would actually be the 590 mark. Yeah. Yeah. So that trade, unfortunately, I said went sour. So, I mean, it's right now at minus 29 out of minus 45. So I don't see much point in closing it because there is still the Hail Mary option. What if that is a flat correction, in which case that would be wave B? So it could still, I mean, I'm not saying likely because a flat subdivides differently. Yeah. And from the looks of it, we're indeed getting 5 waves up right now, but there is still the option that this turns into the move down. Very unlikely, but you know, hope is what dies last. So, and considering that the money involved, I don't really, I mean, maybe I'm wrong here with my attitude, but I don't really consider it worth it. So I could take a $30 loss here, and then while not a big chance, there is a small chance that we still move down and it could actually turn into a profit. And then I would kick my ass, or I don't change anything, and instead of $30, it's a $45 loss. So it's really not that much of a difference considering the trade we made, especially considering the overall risk-reward ratio, because if I would have been right completely and not just partially, the payout would have been 250 or so 5 times the investment. So I don't really need to cut that loss here, considering that it could still turn around. One issue, however, so yesterday we set the orders to close out if we reach 584, and I actually, based on the metrics at the time, that would have been where the trade goes to plus minus 0 or whatever $5 profit. However, I checked shortly before market close, and it already showed that it was at plus minus 0. And I actually decided against closing it because there was still the option that it actually plays out as expected. 1, 2, 3, 4, 5, A, B, C, and then we get our push down. Didn't come like this, but yeah, happens. But the mistake I made yesterday is basically ignoring the fact that the price of the option doesn't change based on the price of the underlying, but there are also other factors like the implied volatility that constantly changes. That affects the price of the option. So I'll have to revisit or rethink how I can best set stop losses, maybe trailing stop losses, and take profit on the option, because clearly using the price of the underlying is a very, very bad approach. Lesson learned, thankfully not an expensive lesson. Yeah. Now, the same seems to be the case in Intel, where also our Intel puts, we can see they are now at minus $10. The risk we have total is $23.60. So also hardly worth talking about, but still to learn something from that lesson. So where also we caught the, I mean, that actually might still be alive till tomorrow, yeah. Only that upwards move is bigger than expected. But from the looks of it, it's still, especially since we made the low here, so that actually might still be good. I mean, it might have still been smarter to close it yesterday for a small profit. I'm going to double check what's our max payout here. Oh, yeah, we don't have a limit because it's like only a put, so we don't cut the profit. But we would need to go to at least 21.36 tomorrow. So we would need to go at least here to be in profit at all, which is possible because this here we have the confirmation. I mean, it's possible that that A, B, C, and C is done here, and we go up and we lose those $23. But it's more likely, in my opinion, here that we're looking at A, B, and wave C has a 1, 2, 3, 4, and wave 5 still to come. So there we are still very much alive, and I think we will see the 61.8 retracement. If we will see it today or tomorrow, so before our option expires, is a different question. But I think there we are on the like better side. However, considering how it's been lately going, so we had and have our options in Novavax. which with this movement went from being profitable to currently at a loss, although the deadline for the option is still far away. So we talked about it yesterday. So if you're curious about what changed in the pattern and so on, check out yesterday's episode. However, those 3 different options, although none of them are about substantial amounts of money, all of them could have been closed at least with, I don't know, 50 to, in that case, maybe $60, $70 profit, which in relation to the costs, the premium that I paid for the options is somewhere in the range of 50 to 100% return on the risk. So while the absolute numbers, so $50, really not a lot of money, at least for most people. But obviously, if we risk like in Intel, 23, or let's round up $25, and the option already was at the $30 profit, then that's 100% return, which is obviously an insane return for like a day or two as a percentage. Yeah. And so I'll definitely have to dedicate some time this weekend to dig into how I can properly set a trailing stop loss on an option, so that basically when it is in profit at a certain point, that it then, doesn't close again or go into a loss. Of course, that only works during market hours, and if there's movement in the aftermarket, it still might move it into a loss, and I have to maybe even remove some stop losses before the market opens every day. So if I then decide no, so like if we gap in the other direction and I decide at this point it doesn't matter and we can hold it till expiration. But in general, I'll have to look into that, so that like yesterday, for example, for SPY, after we finished the stream, I worked on other stuff and whatnot. Yeah. So obviously yesterday after the stream, when we were here and we were at a, I don't know, $50 profit. I don't recall 100%. You can check it in yesterday's episode. But when we then start moving up and our option loses value, that maybe we close it here for, I don't know, a plus 20% return or so, instead of holding it longer, and then today seeing that, okay, instead of a profit, we are going to potentially eat a $45 loss here. Yeah. And we can also see why I didn't close it earlier. So we could have closed it at a $30 loss, and the maximum risk by tomorrow will still be $45. But we can see, due to the small downward movement that we have right now, that at least the loss would be, for example, only $10. I'm still not going to close it because the overall risk is something that I accepted when I opened the trade. And I mentioned here with SPY, we are purely playing on hopium right now. So that indeed, that might be some weird flat correction where this is the wave B that just makes a new high, and we're getting wave C now. There's also the option that we here are getting a truncated fifth wave, that for what isn't usually happening but happens sometime, that we don't reach our projected minimum target, in which case we would now be correcting this entire movement, which also would bring up the chance that we by tomorrow move into profit, or maybe even by tonight. I'm not saying likely, I'm saying chance. Yeah, so really chance, like playing the lottery maybe, or like getting hit by lightning, something like that. So odds are not in our favor, but again, the overall amount is like neglectable. So we're gonna see this through to the end. Yeah. So with that, we already covered for today SPY, Intel, and Novavax. And then we can look at our usual suspect. GameStop is suffering today, which has an impact on our portfolio. But so far, we're still waiting for a strong move in either one direction. I think last week's episodes are still with more data. With more input or more data on the different possible labelings right now and what we're waiting for. Short story is we potentially waiting for breaking the 25-24 to the upside for the confirmation that the correction is actually finished here and we're on the upwards track, or for first breaking at least the 1931 to bring up the option that this will be only a small correction before we go further up, or breaking the 1756 for confirming that we will indeed go to the $15 mark first. Either way, we're going to hold on to our shares and sell our $30 covered calls weekly to make a little bit of premium. It's not a lot, but it's a couple dollars that we get every week for having our shares until we shoot higher and get those shares called away. We're also using some of that money. I mean, some of it is used to pay for our other trades that unfortunately some of them are going south, as we saw. Yeah. Hi Akashi, great to have you here. And we're also using it lately to buy a little bit more extra shares that I probably will then directly register, so transfer out once there is a decent number. Or if we manage to accumulate 100 extra shares paid for with premium, maybe we use that to write other covered calls and increase our premium earnings or so, because I already have the amount of shares that I'm happy to hold long term anyway. So yeah, that's that. Now I'm gonna hydrate a little bit. Had a couple of calls today, so a lot of talking, so it's kind of like straining on the voice a little bit, but yeah. Don't forget to hydrate as well if you're sitting the whole day in front of a computer or something like that, or in general. Yeah. So then our usual suspect, Barnes & Noble Educational. Looks like we're starting to get our movement here to actually confirm that this is one of the spots where we are again, or where it appears to be that we're right. One is to say, I mean, there's still the option that we get another wave down, blah, 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 and I indeed wasn't fully right, yeah. However, one also has to admit that if we entered here, if people, or if, like I did, if we enter on this point, or just like in SPY, where we basically bought our put options here, or in NEO, where we got out here, or in Intel, where we got our put options here, I think pretty much exactly here, yeah. Oh no, this one we got shorter term, or I don't remember. Either we got them here. No, we got them here. We got them here and miscalculated by didn't expect this spike, but overall we still made a good decision to say, okay, from here we're going down. So if one would have followed those predictions with a trading stop loss, well, for me, some of those trades, especially because they're with options where there are multiple factors to consider, unfortunately, probably will not end well, yeah, but the losses are neglectable. One could have made decent profit, so like in all of them, even though I was only partially right, yeah. So there's still room for me to improve, but on the other hand, one should already or always also consider the wins and learn from the mistakes. So the mistakes I'm making is clearly I have to look more into how the heck to properly manage trading stop losses and take profits for options and also shares in Interactive Broker. I still haven't set a trading stop loss for the shares that we bought here at 845 or the shares that we bought here manually then. But clearly it's not a huge position. In Barnes & Noble, we hold an astonishing 30 shares. Yeah, so we're talking about a $300 investment. So it's really not a huge position. And my overall outlook is anyway bullish. But it might make sense to maybe at least set a stop loss that's already at 0 so that I don't risk, if we go down, to suddenly have a loss on those shares, yeah. But I will have to look into that. So that's something I definitely have to improve on, yeah. And overall, however, it's still nice to see the cases where I'm in quotes partially right and fully right. We will see over time in many scenarios, yeah. But yeah, Barnes & Noble Educational, while this could be some kind of corrective ABC pattern that is followed by a push further down, and we only will have further confirmation once we break this deceleration trend line. So once we have a confirmed breakout from here, we can be relatively certain that we are indeed in the 5th wave or in the next impulsive wave upwards. That should bring us to a new high, which should mean at least 50% return on the investment. But again, I could still be wrong, yeah. If somebody would want to enter right now, they would need to place their stop loss at 831, which still is a decent upside. So it's like 20% risk for 50% potential reward. And in a time frame where we're talking like in months, not weeks or years. Yeah, obviously more than weeks. So since we're talking months, but not years. Yeah, but that's about Barnes & Noble. Now, sorry. Moving on, let's take a look at CrowdStrike. We haven't looked at them in quite some time. There, we actually are in the area. I think this correction is not everything. While it's also possible that I made the same mistake as an Intel and we somehow already have an ABC finish down here, and now we are going to a new all-time high. Barnes & Noble course is 940.74. Let's circle back real quick. That was actually the alert that we had for the first confirmation for the upside. So we crossed the high that we had apparently here. which makes it less likely for this to be a corrective move that's followed by more downwards pressure, but more likely for the upward scenario. But again, the confirmation, or the more reliable confirmation that we're waiting for, is the break of this upwards deceleration trend line using Kennedy channeling technique. And once we have that, as said, we can be more certain that this will go further. But when we already have our shares there, so yeah. Circling back to CrowdStrike, so while it's possible that I made the same mistake and this is already the entire correction, and right now we are looking at the next 5-wave impulse up, I think that the actual scenario is wave A, wave B in progress, and for wave B we have A, B, and are currently looking at wave C. And for this wave C, we reached the minimum target, but we can also visually guesstimate that this is 1, 2, 3, 4, 5. Whereas 5 might not be finished because there we might be looking at 1, 2, 3, 4, 5. So there might still be another small push to come if we assume that. So then we would be looking at this, maybe like this. And we can see that our minimum target would be at 328 to maybe 348, which still would be within the, in quotes, maximum target that we would expect for that wave C, which also would be around the 78.6 retracement. So I potentially, while I consider an entry here, to go short, not too bad, because we would have maybe, I mean, technically we would need to have the stop loss here at 397, which would be 35%-ish or 35-ish% loss or risk. But the downside would be, yeah, it's actually a one-to-one trade. We would have 35% roughly profit target versus the same risk. So risk-reward ratio is not too great to enter. But one might consider to enter at the 78.6 retracement at 340. So because there we have the overlap, it's within the profit area or the target area that we would expect for A, B, C. It's within the target area that we would expect for 1, 2, 3, 4, 5. And it's one of the usual suspects for turnaround points for retracement. So entering at 340 with a stop loss at 398 reduces the risk a little bit, and the reward would still be below the 190 mark, 192 mark for a wave C that slowly takes us lower. Because we had a very strong move down here, that move down here should be dragged out and probably take into, I don't know, maybe this first or second quarter of 2025. But yeah, personally, I'm going to stay out of this because it's not the best risk-reward ratio. And there is the possibility that this is already the entire finished correction, in which case it's just eating a loss. And again, eating that loss with only a 1-to-1 ratio doesn't seem like a super promising trade. Yeah. Moving on, where do we move on? Immersion. Yeah, we are finally above the 100% expansion line again, but we are still waiting to break the at least 898 to have confirmation or more of confidence that we finally now finished the corrective pattern. Or on the other side, there is still 1, 2, 3, 4, 5. So right now there would still be a potential 5th wave push be missing. Yeah, unfortunately, I was partially wrong here at this point to assume that the correction is over at the 61.8 retracement and 100% expansion line. We got proven wrong here. Yeah, one could have considered setting a stop loss there, but as I mentioned earlier, that's still something I have to dig into how to do that in Interactive Brokers TradeStation, or how to do that with specific trades, yeah, like trading stop losses, only setting stop losses once we hit a certain price, but set them at a different price level and so on. Yeah, it's a topic, yeah, that actually I should push it up on my list of priorities, to be honest, yeah, because it could save us a little bit of money whenever I'm wrong, and ensure that we take profits whenever I'm at least partially right. And yeah, so in immersion with that, technically nothing changed. We're still waiting for, we're mostly waiting for a 5th wave push down or for confirmation that we're actually done here and are now going to hopefully enjoy our next 5-wave impulse up. Intel we already covered. Yeah, right now, what would we consider possible? So depending on where our 3rd wave is, we can see that right now we would consider this still possible. There's still room a little bit up to finish a 4th wave. There's the option, as I mentioned earlier, that we're done here already with the entire correction because we reached the expected minimum target. But since our risk is only $23, $24, we're going to hold the options till the end and pray to God, in quotes, or to our magic 8 ball, that we will get a 5th wave push down here that brings the option still into profit. Now, no is up today. We're not getting a chart. Again, as promised, I will look into this at some point when it becomes important. I still expect that we will breach the 20-cent mark, at which point it will become important for us to label this, because then we can determine the target area, and then we can basically already schedule our orders for reasonable entry points. Yeah. Costs, yeah, like we're still missing a little bit of an upside here. We wait for a break of the 879 to kind of provide us with a confirmation that we're indeed looking at the next 5-wave impulse up. The strong movement we had recently made it already likely that that is the case, but not in quotes guaranteed. So there's still the option that the entire correction hasn't finished yet. The 50% retracement wasn't the best point, and we're going down. But it's, however, again, one of those situations. I mean, we didn't touch the 50%. We missed it by 652. We missed it by 8 cents. Yeah. So, there we didn't go lower. So we missed it by 8 cents. But it still is one of those situations where one could consider, if we would have entered in that area here with a trailing stop loss, it would have still been a profitable trade, even if the overall analysis would not have been 100% correct. Moving on, NEO, going further down. I think we covered it yesterday that from the looks of it, it looks more like a 1, 2, 3, 4, 5. So only the beginning of the correction, unless this would have been a truncated 5th wave. There should eventually be an upwards movement for a corrective wave. So in this case, correcting. So while this is a corrective wave that corrects this entire move downwards, this corrective downwards move also has corrective upwards move. So there should eventually come a corrective upwards move to give us at least a wave B in a 3-wave correction. And then we get another corrective wave down. So yeah, like here, honestly, patting on my own shoulder here, obviously, but our decision to sell the few shares that we had here was next to perfect. Yeah, so we got in around somewhere here, if we recall it correctly, based on the 1, 2, 3, 4 assumption for the 5th wave, and we called the end of that 5th wave, yeah, really, really well. I mean, we got out a little late, but we still got out close to the high point that was there. So yeah, a little bit more liquid for the throat. Should probably switch to beer or something to get drunk during the stream for extra entertainment. Or not. Moving on, Novavax we already covered yesterday extensively, so there our risk is a little higher with $200 in options, but expiration date still reasonably far away. So yeah, and the overall analysis didn't change too much. Just the intermediate analysis of this corrective pattern unfortunately had to change. NVIDIA, don't recall what we talked about yesterday, but looking at this, yesterday 14, 16. So I'm gonna lean out of the window here. You can check out yesterday's episode to double check me on this, but I probably already yesterday mentioned that it's possible that the correction is done here on the 38.2 retracement, and that we are going up from here in the 5th wave. Although I didn't label a potential 5th wave, or that we only get a wave B and then we get another correction down. Either way, so that's what I recall. I might be wrong on that. Yeah, in that case, I'm sorry. Again, hindsight is 2020. I'm working on having a list compiled regularly and keeping it updated with every prediction, so that I can quickly look up what was my latest statement. And better provide you with some transparency as to how often I'm wrong. Yeah. Either way, from the looks of it, we finished a corrective wave here because we already made a new high, which means we're looking at the next 1, 2, 3, or 3 not finished, 4, 5. So there might be a little bit more upside before we are looking at the next small correction. And then from the overall look, I think there is still a little bit more movement to come. Is it right now a good time to enter? Honestly, no idea. From the looks of it, it shouldn't hurt too much. Stop loss would ideally need to be at the low here, 114.70. and even more realistically or safer at the 195. So we have again like less than 40% risk here, but we also have, if we consider this bigger pattern, Kennedy channeling technique, we should get to see a breakout from this big base channel at some point if we don't already have it. So yeah, we still would have a decent upside here. So even if we have a 40% risk, but there is also, I don't know, a third wave should at least break that channel and likely get us to the 164 or whatever the next extension level is. So yeah, might not be the worst trade. The only, we were at 141, and now we are in that area here. So I think that's the most likely scenario, that we still have further upside here to come. Yeah. There is the vague option that this is basically somehow an ABC, where we would make only a small new high and then we come crashing down. But from the looks of it, it's more like we already have, yeah, that we have a third wave move up here. So from the looks of it, I think this here is more likely. Yeah, don't consider the day, it's just the price level. I think this here is more likely that we're going somewhere like this, yeah, over the next couple of weeks, months, and whatnot. And yeah, SMCI, same thing. We kind of predicted that. I mean, there we have two options on the bigger scale, unfortunately. So my recommendation or my own opinion was also to stay out of it. But we had the labeling of a potential correction that could have finished here. Although I don't like the 21.4 retracement level, because it's usually we would expect at least 31.8 at 38.2. But if we label this as ABC, we hit the maximum extension level and bounced from here. However, we also, to be transparent here and fair, we usually would enter at the 100% level. So right now this would be a trade that would be underwater, but still with the right bounce or acceptable bounce to salvage it. Not sure about how I would handle this right now. So thankfully we didn't enter and we didn't trade it and whatnot. Yeah. But probably. Now I probably wouldn't. I mean, I didn't enter and I probably wouldn't have entered because of the bigger picture issue that we didn't retrace 38.2% at least, and giving us different possibilities. Yeah, so kind of like it can go up or it can go down, which is not much of a prediction to make a trade on. Yeah, moving on. Actually, SPY that we already covered earlier. So in the beginning of the stream, actually. So and we're currently getting bashed with our small option risky gamble there, and which leaves us with the Nasdaq actually for today's stream. So where the overall outlook here is still up. So we can see potentially wave 1, 2, wave 1, 2, 3, 4, 5. No. 1, 2, 1, 2, 1, 2, 3, 4, 5 for wave 1. ABC wave 2, 1, 2, 3, 4, 5. And we reached the minimum target. No, we didn't reach. No, we reached. Where are you? This one and this one. Yeah, we reached the minimum target for this wave, if that would be just a corrective pattern that's followed by downwards movement. And we have not yet reached the minimum fifth wave target if this is 1, 2, 3, 4, 5. Yeah. Now there is, however, also the option that this is 1, 2, 3, 4, 5, in which case the target would be even higher. So either way I see midterm, so midterm still some upside. short term, there is the possibility that this will be some kind of like ABC with still a little bit of a push down, but we could have the stop loss here at 19,622, and our upside, which would be 800 points roughly, whereas our upside would be, wouldn't be such a great trade. We would have a 1-to-1 ratio, potentially a better ratio depending on the pattern, but not much better than 1-to-1. So also something I would stay out of right now. And with that, we actually have everything. So like, how long? Oh, it's already a little bit of time. But that's it then for today. So I'm gonna have to slap myself a little bit in the face for not properly setting trailing stop losses or taking the profits yesterday early. But when we make a trade with $45 risk, and we know the profit when we're right is $250, it seems stupid to take the profit at $50, because it means we suddenly would need to be right 50% of the time at least to make the same trades profitable in the long run. Whereas if we let it play out, we only have to be right like every fifth time to make those trades profitable in the long run. So yeah, one can argue. I mean, thankfully those positions were all small, and I'm definitely going to survive the result. It still obviously bugs my ego a little bit that it looked like I'm completely right and that we're moving in the right direction, just to then have to admit today that, okay, well, I got the turnaround points right, I didn't get the distance right. But yeah, that's how it works. It's a learning experience always for everyone. Hopefully, if you stop learning, you probably will not do very well. I think it's a constant learning experience, and I promise to dedicate some time on the weekend to look more into the different options that TradeStation offers, so Interactive Broker offers in the software, to set and manage stop losses on shares and on options. It's unfortunate while we overall are still looking at around 30% return for the year. In this account, since I moved to Interactive Broker in the middle of May, there are some losses that could have been avoided. For example, the $400 SunPower loss, could have been avoided by setting a stop loss at the price where the pattern became invalid. The same goes for Green Wave, and like that would be makes a 10% difference in the return. Or maybe not a full 10%, but the loss would not be as big like it's now. I mean, right now we still have shares, and although SunPower is in bankruptcy, so shares will likely be worthless. But yeah, so definitely we'll have to prioritize that in the future, or at least deal with it, because it's in the long run, it's going to make a difference. In the short run, it will not make a huge difference if we took the $50 profit that was pending yesterday, or take a $50 loss tomorrow, or $45 loss tomorrow. But obviously in the long run, it will make a profit. So I definitely have to improve my, not risk management, because we're not taking huge risks in relation to the portfolio size on the individual positions that we have, but on the order management to, like exit scenarios and so on. Anyway, thanks for stopping by. Thanks, Akashi. Thanks, Olga. Thanks, everyone that lurked in between. I hope you were able to take something away from today's stream. Don't forget, like, subscribe, enable notification, especially that thumbs up. Doesn't cost you anything, but helps me a lot to tell YouTube to show my live streams to a few more people. And with that, I wish you all a pleasant rest of the day, and then see you all tomorrow again, roughly 5 minutes before the market opens, for another episode of Daily Market Mastery. Till then, bye-bye.